Here are the crypto top headlines covered in this video. Bitwise has filed an XRP ETF. Next, Solana DApps volume increased by 46% in a week. Is $180 SOL the next stop? Also, analyst Benjamin Cowen says unemployment rate may hold Bitcoin back in Q4. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Bitwise has filed an XRP ETF. The crypto-focused asset manager filed the exchange-traded fund application in the state of Delaware. An application for a Bitwise XRP exchange-traded fund has appeared on the state of Delaware's Division of Corporations website. Cointelegraph independently confirmed the filing with a Bitwise spokesperson. According to the filing, the Bitwise XRP ETF was incorporated on September 30th, 2024. The registered agent was listed as CSC Delaware Trust Company, which is headquartered in Wilmington, Delaware. The filing in Delaware does not necessarily mean that a registration application with the Securities and Exchange Commission is imminent. This step could be part of early-stage preparation, and it's possible that no formal filing with the SEC could take months. The application comes just a few months after Ripple CEO Brad Garlinghouse hinted about the upcoming financial product, describing an XRP ETF as inevitable following the launch of Bitcoin and Ether ETFs in the United States. The approval of an XRP ETF would allow institutional investors to gain exposure to cryptocurrency through a regulated investment vehicle, potentially boosting liquidity and token adoption. Rumors have circulated about an XRP ETF launch in recent months. In November 2023, the price of XRP surged by 12% after a fake filing for a BlackRock iShares XRP trust in Delaware sparked speculation over a potential XRP ETF. The application was later denied by BlackRock, and Delaware prosecutors are now looking into the deceptive filing. SEC versus XRP. The application in Delaware follows years of legal disputes between the SEC and token issuer Ripple Labs. In 2020, the SEC sued Ripple, alleging that its sale of XRP constituted an unregistered securities offering. Nearly 3 years later, in July 2023, Judge Annalisa Torres ruled that XRP is not a security when sold on public exchanges, providing Ripple with a partial victory. However, the ruling indicated that institutional sales of XRP could qualify as securities offerings. The latest development in the case occurred in September 2024 when both parties jointly requested a stay on the case's final judgment pending the outcome of the SEC's appeal. This stay would allow the court to pause further proceedings until the appeal is resolved. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Solana DApps volume increased by 46% in a week. Is $180 SOL the next stop? An uptick in Solana's network activity and upcoming project launches could send SOL price higher. Solana's native token, SOL, experienced a 9% decline over 2 days after peaking at $161.80 on September 29th, marking its highest level in 7 years. This correction mirrored the broader altcoin market capitalization, excluding stablecoins, which reached approximately $800 billion in late September before dropping to $739 billion on October 1st. SOL price is trending up, backed by strong TVL and low fees. Despite this downturn, Solana network usage surged in the past week, prompting traders to question whether SOL has the potential to outperform its competitors. Notably, despite the recent correction, SOL's price has increased by 10.4% over the past 30 days, suggesting that overall market sentiment remains positive. Moreover, Sol continues to rank as the fourth largest cryptocurrency by market capitalization and the third in total value locked, or TVL, which measures the amount deposited in the network's smart contracts. Solana's network distinguishes itself with low latency and extremely low transaction fees, especially when compared to major competitors like Ethereum and BNB Chain. According to Gas Fees Now, the average transaction cost on Solana is a mere 2 cents, while Ethereum's average approaches $2.50 and BNB Chain's is around 8 cents. In this regard, Solana's strategy to enhance network robustness through its validators has proven effective. However, low fees alone do not guarantee increased inflows or network activity. Nonetheless, they offer a competitive advantage for users who prefer not to rely on Layer 2 scaling solutions, which can add complexity and additional cost. For example, the Pump.Fun meme coin Launchpad achieved significant success among traders, reaching an impressive 65,000 daily active addresses in late July. Sol potential comes from gaming and mobile applications. Experienced asset managers, such as Van Eck, believe that Sol's price could grow by 120% from current levels due to its scalability, which is crucial for the adoption of stablecoins and remittances. A September 25th report from Van Eck cites institutional adoption potential and the extraction of value from Ethereum Layer 2 solutions as the main drivers behind the improved investor perception of Solana. Additionally, the announcement of GameShift on September 24th, a gaming development API utilizing Google Cloud architecture and supported by Solana Labs, has been highlighted as a potential catalyst for increased demand on the network. GameShift aims to provide a comprehensive suite of Web3 services for traditional game developers, including the integration of non-fungible tokens or NFTs and digital assets. Additionally, investors are placing significant hope in the launch of a new Solana-backed smartphone named Seeker, priced below $499. In addition to the much-anticipated token airdrops targeting these users, the device will feature an upgraded Decentralized Applications, or DApps, store to better capture emerging use cases, according to Solana Labs. Given this positive outlook, investors believe that recent growth in activity on the Solana network will eventually translate into higher demand for Sol. The network's total value locked increased to 36.1 million Sol on September 30th, remaining essentially flat compared to the prior 2 weeks, but only 3% below its highest level in 2 years. In USD terms, the $5.5 billion in deposits surpasses the $4.6 billion TVL of BNB Chain, according to DeFi Llama data. However, according to DappRadar data, the most significant highlight in Solana's activity was DApp volumes, which increased by 46% compared to the previous 7-day period. In comparison, Ethereum dApps gained 12% during the same period, while the BNB Chain's numbers remained flat. Notably, Ethereum's gains were heavily dependent on Balancer, as its leading dApp, Uniswap, experienced a 6% decrease in volumes over the 7-day period. Meanwhile, gains on Solana occurred across the board, with Marinade Finance up 66%, Pump.Fun gaining 93%, and Solend jumping 143% over the last 7 days. Similarly, the number of active addresses engaging with smart contracts increased by 13% during the past week, driven by gains on the Jupiter exchange, which amassed over 2.77 million unique addresses. Based on current news flow and network activity, Sol's price appears poised to outperform the altcoin market, potentially paving the way for a bull run toward $180 or higher. Our next top headline, Analyst Benjamin Cowen says unemployment rate may hold Bitcoin back in Q4. Cryptocurrency analyst Benjamin Cowen is warning that the U.S. unemployment rate may have a significant impact on Bitcoin. In a video update, Cowen tells his 814,000 YouTube subscribers that because of the historical correlation between unemployment data and risk assets, if the U.S. unemployment rate continues to rise to close out the year, Bitcoin may remain in a bear market. If it follows the cycle from 2000, the unemployment rate moving up by the end of the year, it could be at 4.8% or 4.9%. Now, if the unemployment rate is at 4.9% by the end of the year, it would lead me to believe that Bitcoin is still probably unable to break through the lower high price structure. Let's look at one from the 1990s. In the 1990s, yes, there was a recession, but the S&P only dropped like 20%. It wasn't nearly as bad, but even then the unemployment rate could still be 4.6% if it follows that. Cowen also says Bitcoin seems to be following a similar 2019 pattern when the flagship crypto printed lower high and lower low prices on the monthly time frame before breaking out. This is one of those things where it's going to be dependent on the labor market, I think. And I think it's easy to sort of discount it and pretend like it doesn't matter, but I would argue that a lot of the people that would argue that it doesn't matter would have also said that Bitcoin was going to be $100,000 6 months ago. If you guys remember back to March, so many people were not anticipating a 2019 style drop where it's a painfully slow process of lower highs, lower lows, where Bitcoin dominance goes up. Bitcoin is trading for $63,331 at time of writing, down 3.1% in the last 24 hours. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.